G'day guys and welcome back to another episode of the Aussie Investing Machine. In this episode, we'll have a look at two key things. One, why tech stocks are going down, and two, what will be the top stocks going into 2021. Now, these two topics actually go hand in hand, hence why I want to cover both of them in this video. So stay tuned, we'll get right into it in a minute. Don't forget to give the video a like if you haven't already and subscribe to the channel for more great content. As always, this video is for educational purposes only. Before making any investment decisions, please contact a licensed financial advisor. So let's jump straight into the first topic today, which is why tech stocks are seeing a bit of a downside at the moment. Over the past few weeks, my personal portfolio has done somewhat of a backflip. The stocks that used to be the worst performers are now the best performers, and those that were the best performers are now performing quite poorly. My tech stocks like Kogan and Pushpay have taken a bit of a hit. On the other hand, the more traditional bricks and mortar stocks such as Goodman Group, Crown Resorts and Beach Petroleum have all seen big boosts in their stock prices. Looking at the past few weeks, the stocks with the best performance seem to be those in resources and property. It's these two sectors that are likely to pull Australia out of a recession. Now, some of this has been driven by hopes of an effective vaccine, which is due to be delivered in the next few months. I think as the vaccine comes out and is distributed, we'll see even more growth in these particular sectors. So looking at resources as the first category, Australia is heavily reliant on resources as a source of its wealth and prosperity. Globally, there's new resources which are becoming more and more desirable. These are resources like lithium and graphite. This is primarily being driven by the push towards renewables. We've seen a lot of countries commit to getting rid of petrol and diesel cars in place of EVs, and generally there's a push towards carbon neutral. In addition, more traditional resources remain in high demand, such as gold, silver and iron ore. Coal prices, whilst currently taking a bit of a hit, as well as coal miners, will definitely be relevant going into the future, as it will be required for one, making steel, and also for developing economies. So watch out for coal as being a good export commodity for Australian companies. The second emerging category appears to be property. We know that Australians love property, and we also know that infrastructure spending is a go-to technique for governments to stoke economic growth. Stocks on the rise over the past week include CIMIC, Goodman Group, Charter Hall, Centuria. These are all heavily invested property companies. As the lockdown is now lifting across Australia, we can see this focus shift back towards bricks and mortar style businesses. With these property and infrastructure companies booming, we also expect to see the companies that support these organisations also benefit from this shift in the market. We'll get to more on that in the next section of the video, where we look at the top stocks for 2021. So we know those categories are on the rise and we know why that might be, but what about the fall in technology stocks? During the COVID-19 pandemic, a lot of tech stocks had no real impact to their revenue or profit margin. Not only this, but a lot of technology companies actually saw an uptake in the use of their products. This is because people were obviously stuck inside, couldn't get out, and had to more heavily rely on technology for their day-to-day needs. As a consequence of this positive momentum for tech stocks, they were probably overbought a little bit. What we're seeing at the moment is probably a bit of a price correction, where investors are taking profits they've made in the tech sector and are reinvesting into those industries we talked about earlier. There's a number of more traditional bricks and mortar stocks at the moment that are currently undervalued, so it's no surprise investors are shifting to what is perceived as good value. Personally, I'm not taking any money out of tech stocks. I think after the correction, we will see them continue on a strong growth pathway. Be keen to know what you think. Have you rebalanced your portfolio at all? What are you doing with your tech stocks? Leave me a comment below. I'd love to hear your thoughts. All right, let's do it. Let's talk about my top stocks for 2021. Now, I'm going to break this down into three categories of stocks and give you some examples of companies within these categories. Now, some of these categories will align with what we were just talking about, which was the rise of property and resources in Australia. So category number one, you guessed it, is property and more importantly, infrastructure stocks. We know that the Australian government will be spending big on infrastructure. There's already a number of major infrastructure projects in the early stages and planning phases at the moment. As soon as the construction phases of these big projects kick off, we'll see some of the big ASX infrastructure players take a real jump in revenue. We also know that the government has been making some policy changes in order to encourage property investors in the market. We've seen tax relief for property investors as well as incentives for new builds. This stimulus is trying to fuel a new property and construction boom. So with those 2 points in mind, what companies are most likely to benefit on the ASX from these market forces? Well, I think some of the big developers will definitely profit. The likes of Goodman Group, Stockland, Mirvac, and Lendlease are all heavily invested in property development. In terms of engineering construction, expect to see companies like Downer, CIMIC, and Transurban really benefit from the government's big infrastructure spend. Now that's my first category, and I'm not going through these in any particular order. I think they're all valid areas for growth in 2021. On to category 2, it's very closely related to category 1. Category 2 is the construction materials category. With a boost in construction activity, we could expect the material suppliers to the industry to also benefit greatly. There are a number of material suppliers which have had a hard time through 2020, meaning that their stock price has taken a hit. Now, this doesn't apply to everyone. Companies like James Hardie, for example, have made headwinds through 2020 with some big gains in their share price. However, those stocks that have had a bad 2020 can certainly be picked up for serious discounts at the moment. Companies such as Adbri, for example, can be picked up for less than half their all-time high, which they hit in 2018. Adbri is definitely one of the companies I think will benefit from the big building boom that we're about to go into in 2021. Some of the government measures that have been introduced in state and federal budgets in order to push the property market forward are quite significant. We're currently seeing extremely low interest rates, which have been promised for years. We're seeing stamp duty concessions on property. We're seeing a reduction in land tax, and on top of all of this, we're also seeing an easing of lending restrictions. All of this is great news for the property industry, both homeowners and investors. I think we can expect to see a big boost in the residential construction market. As a result, some of the building material companies that I think will benefit the most going into 2021 include the following: James Hardie Industries, Bingo Industries, Brickworks, CSR, Adbri, and BlueScope Steel. Now, as I mentioned, a lot of these companies are trading at quite an attractive price at the moment. I don't think we'll see a stock price increase in these companies as quickly as we will with the property developers and also the construction engineering firms. That's simply because the revenue for these guys will come later down the track. But if we can forecast the amount of work that's coming up in Australia, we can make an accurate estimation of the revenue increase that these guys will experience. Okay, so my third and final category that I think will have a massive 2021 is the resources category. Resources are abundant in Australia, and this sector is one that has been booming for years and has recently taken off even further. The world is becoming ever more anxious about China and its rise to power, and as a result, they're looking for alternative suppliers for key resources and minerals. SYR Resources, listed on the ASX, is one of the biggest graphite producers outside of China. They've noted recently that the graphite anode supply chain is 100% reliant on China. Graphite is also designated as a strategic mineral for the USA, Europe, and Japan. This presents a big opportunity for Australia's graphite and lithium miners. The big shift globally towards electric vehicles is driving demand for graphite and lithium through the roof. We know a number of countries are now setting limits to completely eliminate petrol and diesel passenger vehicles in the 2030s. This will undoubtedly create a huge demand for supply of lithium and graphite. In addition, gold, silver, and copper still remain in high demand, and there's an abundance of these resources in Australia. All of these precious metals are required for the production of electronics and electric vehicles, So expect that the demand for these as well will lift in 2021. The recent drop in the gold price may present an opportunity to buy into some of the best Australian gold miners such as Northern Star. So what are the mining and resources companies that I think will benefit the most in 2021? I think these companies will include Talga Resources or Talga Group, SYR Resources, Mineral Resources Limited, and Northern Star Resources Limited. These companies mine a mixture of graphite, lithium, iron ore, copper, and gold. I think there's no doubt the demand for these resources will be strong going into 2021 and beyond. I think for the right price, a good miner is a great investment. Well, that's my look ahead to 2021. I hope you enjoyed that overview. If there's any of those companies I mentioned that you'd like me to do a deep dive into, make sure to leave me a comment below. I'll certainly be watching all of these sectors very closely, waiting for the right time to buy some of my favorite companies within those sectors. I'd love to know your thoughts on my top picks for stocks of 2021. Maybe you've got some that I missed. I'd love to know about them. Make sure to leave a comment below. As always, smash that like button, subscribe to the channel if you haven't already, and I'll see you in the next video. Cheers.